Hello, guys. Good morning, good afternoon, good evening, good day from wherever you're listening to this from. Once again, it's proudly brought to you by Just to Trade Stock Brokerage Company, guys. And today also we have a very interesting topic, and trust me, I'm going to love this topic. We're going to be talking about the moving average. Yes, MAV for short, and we're going to be learning about the concept, what it entails, what it exactly means, how it works, what the up and down movement on the chart means, right? So we're going to be in short, we're going to be understanding the ideas, the concept, so that when we are using it on the market, we don't just use it blindly, or we don't just follow suit, or we don't just use it because we are just using it, but then we're going to use it with understanding, right? We're going to spend a few minutes. We're going to talk about what the moving average is, how the lines go up and down, and I think yes, we are good to go. So as usual, we're going to be tackling the definition of moving average. What is moving average? So let's go to our favorite website. Yes, I guess you know that. So that is Investopedia. Okay. Okay, so we are now on Investopedia, and let's get the sorry for that oops advert. All right, so now here we have it. It says moving average. In statistics, a moving average is a calculation used to analyze data points by creating a series of averages of different subsets of the full data set. So in finance, a moving average is a stock indicator that is commonly used in technical analysis. The reason for calculating the moving average of a stock is to help smooth out the price data. Guys, take note of this. The reason for calculating the moving average of a stock is to help smooth out the price data by creating a constantly updated average price, right? So we're going to be talking about that, and I'm going to be showing you how this calculation is done. It's not that difficult at all, not at all. By the time we finish this discussion, you would understand it perfectly well. So let's get what Wikipedia also has about moving average. Okay, so Wikipedia also makes us understand that moving average in statistics, a moving average is a calculation to analyze data points by creating a series of averages of different subsets of the full data. It's also called the moving mean or rolling mean. Yes, and it's a type of finite impulse response filter. All right, let's not try to confuse ourselves with these big words. In actual sense, guys, it is very short, and sorry, very simple. So we're going to be discussing that briefly. So stay tuned. All right, good. So first of all, so in simple terms, if we want to describe if we want to define the moving average, in simple terms, we can say it's an indicator that sums up, that takes the past prices and then summarizes it. Yes, in simple terms, you can say the moving average is an indicator that takes the past prices and then summarizes it. So before we go in, there are different types of moving averages. Actually, we have the moving average, we have the adaptive moving average, we have the double exponential moving average as well, and we also have the triple exponential average. But today we're going to be talking about the simple moving average like you have on your screen, and we have some learning objectives as well. So before we finish today's discussion, we should uh, have we should have this in mind: how to know the stronger and weaker markets to trade on, that is signs of relative strength, using the moving average, and also to know the better times for your entries, not just doing it blindly, but then following the trends and then using the moving average. You should be able to know the better times for your entries. And then thirdly, we're going to be identifying massive trends as well. How to know the trends on the market, the ups and downs on the market using the moving average. And finally, using the moving average to throw your stop loss. Yes, so you can just pen this down. Before we finish today's video, this is what we should have in mind, using the moving average to throw your stop loss, guys. So yes, this is it. So in basic terms, if I want to practicalize the moving average definition, right? As I said what it takes the past prices on the market and then summarizes up. So there are different parameters with regards to the core concept of moving average. We have the 5 period, we can have the 5 period moving average, the 3 period moving average, the 10 period moving average, the 200 period moving average, the 500, the 50. So it depends on the kind of moving average you want. So it depends on what you are looking out for. How many, I mean, it depends on the prices that you want to sum up. So, for example, if you want to sum up the last three prices on the market, you're going to use the 3 period moving average. So, on various platforms, they have that setting in there where you can put different parameters as well with regards to the time frame of the moving average. So, for example, let's say if you take the 3 period moving average, that means it's going to sum up the last three prices on the market, right? So for example, the last three prices on the market was, let's say, $15, $10, and then let's say $5. So we have 15 plus 10 plus 5. That makes it that makes it 30, right? So you're going to be finding the average of this. So you're going to divide it by 3, which is going to be what? 10, right? Which is going to be 10. So guys, let's follow whilst we achieve our learning objectives today. All right. So the first point we're going to be discussing is how to know the stronger and weaker markets to trade on. That is signs of relative strength. And we're going to be doing that on the trading platform so that you can understand it clearer. You can have a better understanding of how the moving average works, right? So let's visit our platform. All right. So there we have it. Okay, so we're going to just use a random ticket. I mean, random. Yes, let's just use the Euro USD. Yeah, I think the Euro USD will do for us. All right, so let's just check it out. The Euro USD already open here. All right, so as we can see, we have the chart of the Euro USD where we have uh, the bulls in red and then the bears in green. Yeah, that is how I like my charts to be, right? Okay, good. So guys, we're going to be using let's practicalize it using the 50 period moving average. The 50 period moving average. So first of all, you can use this to know the stronger markets to trade on, like I was saying, and then the weaker ones to short. This concept is known as the relative strength. So let's just try and then see. So let's insert some indicators. I mean, the indicator is a trend. So the moving average. So we are going to use the 50 period moving average. Yeah. So there we have it, the 50 period. And I think since we have it, okay, let me see if the red work. Right. I don't think it's that clear. Maybe we can change the color. I'm coming. Sorry. So we have the indicators. hmm Moving average. Mm, guys, I hope it's clear enough. So, like we said, we are going to sum up, it's going to sum up the last 50 prices on the market, right? And then it's going to give you an average of it. So, like you can see here, the indicator has been added. That is the moving average. This is it. So you can see that the last price on the market now goes for 1.16555, but then this price is above the moving average. As you can see here, guys, it's above the moving average. So in basic terms, when it's above and below, I mean, sorry, it's when it's above the moving average, it shows strength, right? It goes for the market is strong. It shows the strength of the market, right? In basic terms, when the price is above the market, it goes for strength. So this actually a way to, I mean, to determine the relative strength. So that means the market is strong at that moment and it's booming. So you can go for a buy. Do you understand that? You can go for a buy. Okay, so now let's try another example and let's see how the moving average is going to describe a particular market. So maybe let's try the, so we can try the USD Japanese yen. Yeah, I think it's already open here, the USD Japanese yen. Okay, good. So let me just, all right. So applying the 50 period moving average, you can see that, okay, oh, so the Japanese yen is also above. All right, let's just try and get an example where the price is below. Okay, just hold on. Let's just see the British AUD, the British pound, Australian dollar. Let's check it out. Yeah, so the 50 period. Oh, this is also above. Okay. Want. Okay, let's check the USD. Okay, let's check it and see. The 50 period. Oh, okay, this is also slightly above. All right, so guys, in the basic terms, I was just trying to get one of the tickets that will show the moving average below the price currently on the market. So in basic terms, when it's above, it shows strength, and then when it's below, it shows weakness. So that means the market is weak, and then most of the times you can go in for a short when the market is weak. You can short, that is, I mean, that goes for the shorting concept, where you can predict that, oh, the market will be going down, right? That is using the moving average. And but there are some instances where, like the examples we've all seen, there are instances where all the prices are above. Sorry guys, all right, so actually for this example, yes, sorry, for the USD HKD, the price is below. Good. The price is below the moving average. So you can see it here. The price is below the movie. So actually this market is weak, right? So this market, you can go for a short on this kind of market, the USD HKD, right? You can go for short, and then the strong ones, you can go for a long position. You can go for a buy, right? Good. So in there are some instances where both prices are above the moving average, right? Are above the moving average. So how do you determine? I mean, prices are above the moving average. So both markets show, I mean, signs of strength. So the question then comes in: how will you decide to know which particular market to go for, since both are all above the moving average, right? So let's, I mean, let me show you. So let's go back for the Euro USD. So you can see the Euro USD. So this the space, the frame, I mean the distance of the last price to that of the moving average. So you can see that this is it. This one box, the space of one box, right, determines the space between the price and then the moving average, right? Good. And then let's check. So just take note of this, the space one box away from the moving average above it. Okay, so let's just try the British pound. No, okay. All right, good. A very good example. So you can see the British pound, uh, the USD Japanese yen. Good. See the distance between the last price and then the moving average. That is about one, two, three, four, 5 boxes, almost 5 boxes. That is the distance. But then the Euro USD was just one box, interval, right? So normally to decide which market you go in for, you should go for the one that is much much higher than the one closer to the moving average. So in comparing the two, I would go for the USD Japanese yen because at the moment it shows that this has a much, it's much up, so which is good. So it's more bullish, right? So if you are the bullish type who you go in for bulls, you can go in for this at the market, on the market at this time, right? With regards to the strength on the market. So the much distance it is away from the moving average, the more bullish it is, and then the more, I mean, speculative it is to make more buys and then make good, gains. Do you understand? So yeah, that is it with the moving average determining the relative strength of the market. All right, guys. So let's just go to the second point, knowing the better times for your entries, right? Knowing the better times for your. So as I said, the second point is knowing the better times for your trade. So guys, with normally when the market is bullish, everyone is like, oh yes, it's time to buy. Yeah, guys, let's buy. But trust me, you should know, if you buy here, right, there's a chance that it will move lower or down. So it's better when it's to make a speculative trade, it is better when it is near the 50 period moving average. That is the best time to buy. So in this case, it's a matter of waiting so that a price comes to you, right? So you wait for the price to come to you. So with this chart like this, it would have been better to buy somewhere here, right? Somewhere here, maybe somewhere here too as well, so that you can stay longer in the trade. So somewhere here, uh, somewhere, sorry, somewhere here. You understand? So as I said, it's the best time to buy is so that it's like you are waiting for the price to come to you so that you buy. You get it? So you can see as I showed, this would be a best place to buy. It will be it's much more favorable location for your trade. So guys, please don't just blindly chase the market. Let's give another example. This for the, let's try the Euro USD and let's see. Good. So for the Euro USD, this is also a very good place to buy now. This is a very good place to buy. Example here, and then let's try other. Okay. So this is also a very good place to also buy. Yeah, right above the moving average. This is also a very good place you can buy. So guys, take note of that. Just wait for the price to come to you so that you buy, and then you can endure the pullback when the drawdown comes. But then if it's higher and the drawdown just comes right away, it's going to be serious, and you might suffer some losses there. So always take note that you buy at you buy when the prices are not very high away from the moving average. Closer to the moving average, you can buy there so that when the drawdown comes, you can endure the pullback, right? Good. So this is with when to place your entries. Take note of that. And then Third one is what identifying massive trends, how to know the trends on the market, the ups and downs, right? So in knowing the trends, we are going to be using the 200 MA, the 200 moving average, just to have a longer trend, right? So that we can study that much. So let's change the indicator, still the moving average indicator, but then we're going to change the parameter. So let's use the 200. Perhaps we can change the color. Let's just make it red now. Oh, where's our indicator? Let's try it one more time. The 200 period. So yes, there we have it. So we've added the 200 moving average, the 200 moving average. So yeah, we have it. So to see, just because we want to have a longer trend to analyze what we're talking about. So we are using the Euro USD with the 200 moving average, the 200 MA. So to see the long-term trend, you notice that the price is below the moving average. This is the price at the moment. This is it. It's below the moving average. So in basic terms, if it's below the moving average, you look at shorting the market. If it is above, you look at opportunities to buy, right? So this is basically a way to know when to long or when to short. So guys, take note, if it's below, you look at shorting the market, and then if it's above, you also look for opportunities to buy. So let's check other examples and see using the 200 moving average. All right, let's try this. All right. So good. So adding the 200 MA to the British pound Australian dollar, you can see that it's way above, it's very, very bullish, way above the moving average. So in terms of, I mean, with regards to this, you can also look for an opportunity to buy. So you can check the trend, right? So we have added the 200 MA to find a longer trend. So you can see that it is above, way above the moving average. So this also an opportunity to buy, guys. You look for an opportunity to buy. So in checking the trend, it's basically to know whether to long or to short. And then the uh, so finally, we're going to talk about how to use, let's say, it says using the moving average to trail your stop loss. Using the moving average to trail your stop loss. So for this, we're going to be using the 50 period moving average. It depends on you. You can use any moving average that you want because it's with regards to your specifications, what you are looking out for on the market. It depends on your goal, right? So in basic terms, how to use the how do you call it, the so now we're going to be using the 50 period moving average. So I can just change specifications here. All right, so there we have the 50 period moving average. So in basic explanation, when you want to check short-term trend, you can use the 20 moving average. And then if you want to check for mid-term, you can use, let's say, from 50 to 80 or 50 to 90. And then mid long term, you can use the 100. For long term, you can use the 100. So first of all, let's just check the so we're using the 50 moving average. So you can see that if you had bought here, you would have exited somewhere. I'm coming, let me show you. So using the 50 moving average, let's say if you had given, this is the 50 moving average. So if you had given a short position here, some of you might have stayed very longer, and then exited around somewhere here, which would have been a very quiet, huge move, right? A very beautiful move to make some good profit. And some of you would have loved to even do more longer term, so you would have stayed in the trade much longer, like I said, much longer, and break out where the price exists, exits. You understand? So usually, for if you want to check the shorter term trade, you use the 20. If you want to check the mid term, you can use the 50 to 80 or 90 or even 100. And then for the long term, usually you can now use the 200. Initially I said you can use the long term 100, right? 100 MA, but then 200 would be preferable, right? So with the short term, the drawdown is shorter. With regards to the short term moving average, the drawdown is shorter, but then the long term, the drawdown is deeper and longer. You have a deeper and longer drawdown, so you have, I mean, more time to deal with a deeper and then longer drawdown. So yes, guys, that is it with regards to how to trail your stop loss. It actually depends on your trading goal. What do you want, your catch, and yeah, you're good to go. You get my point. Well, maybe one may be asking, oh, so that means it's better to use the 50 or the 200. But then, as I said, it depends on uh, your goal. What exactly you're looking out for on the market, right? Good. So yes, so that is it. I believe we've been able to talk about the 4 points, how to know the stronger and weaker markets, knowing the better times for your entries, and then identifying massive trends, and then using the moving average to trail your stop loss. Yes, guys. So this is it for now. So if you have any questions or you have any maybe concerns, you can just drop them below in the comment section, and then we'll do very well to answer every question of yours. So yes, guys, this is it. I want you to watch the video, like, and drop some comments. Yes, so we'll come your way with another indicator and how to use it. I believe you have understood it, how to use the moving average, the concepts, the basic concepts, and then what actually it does on the market. Yes, so guys, thank you very much. Have a good one. Bye bye.